Judging by the last 466 times where Bitcoin was very confidently declared dead, yet it managed to survive, I would wager, thinking probabilistically, that Bitcoin is not dead. The simple driver that is causing young people to be priced out of homes and apartments is wages just have not kept up with inflation over the last several decades. Bitcoin's monetary properties allow it to be a completely uncorrelated risk-off asset that investors want to own in good times and bad. And so ultimately, Bitcoin can one day be and will one day be the least correlated asset in existence.
So hello and welcome to our Firefish channel. My name is Igor. I'm the co-founder of Firefish, and today we have a special guest, Joe Consorti from Horizon. Joe is a real Bitcoiner. He's an economist and an analyst, and he works in a very interesting space that we're going to discuss today, which is real estate combined with Bitcoin. So Joe, hello and welcome. Thanks for joining us on this podcast.
Of course, Igor, thank you so much for having me. I'm really excited to chat.
Excellent. So I do have around 75 questions for you, Joe, because really I think the area that you're operating in is very, very interesting. But I would start with a very, very simple one. And the question is Bitcoin dead?
That's a great question. Judging by the last 466 times where Bitcoin was very confidently declared dead, yet it managed to survive, I would wager, thinking probabilistically, that Bitcoin, similar to those other instances, is not dead. It's funny, we've seen this time and again. You know the website bitcoinobituaries.com, where you could look at it and it will show you the amount of times that Bitcoin has been declared dead by major news outlets, major political pundits, financial people, and it's still here, right? It's still here. It's still $1.3 trillion in size, and it's not going away. So if I were a betting man thinking probabilistically, I would say that no, Bitcoin is very much not dead.
That's a great one, and I think many people ask the same question nowadays, especially considering what's been happening in the markets in the last couple of months. I mean, since the all-time highs, Bitcoin went down pretty significantly, and there's a lot of themes or narratives in the market like why this is the case, right? If we look at 2025, people say Bitcoin got it all. We got ETFs, we got the government sort of support, a lot of positive things happen in Bitcoin space. So the question is, why did we get stuck at the all-time high? Why Bitcoin has actually slipped to the levels at which it is right now, around 65K? So what is your take on this? What are the key drivers that you see in the market driving the Bitcoin price lower?
For sure. I mean, like the first one, and this is the most obvious one, is long-term holders selling. So people who have been holding on to Bitcoin for a very long time, 155 days or more, who've been here for as little as 6 months to as long as 10 years, 12 years, distributing their coins to newer entrants. This is a dynamic that we always see. And when long-term holders selling overwhelm short-term holder buying, then ultimately that's when you see the market turn over. That's when you see us hit an all-time high and you see Bitcoin crash. So that's basically the exact same dynamic that we saw last October. Now, the question is obviously that's the dynamic that we saw, that we witnessed, long-term holders selling, but why are they selling, right? Like a couple of things come to mind. First and foremost, long-term holders have managed to survive numerous extinction level events for Bitcoin. So all the way back in 2022, FTX collapsed. Bitcoin at its lowest was about $16,000. It had plummeted from $69,000 just the year before. And so holding through that, and then at already low prices around $20,000, $24,000 for one of the largest exchanges globally to collapse, and then holding through another 40% drawdown at the very bottom, that takes guts, right? It takes quite a bit of resolve. And so for people who survived that, it's only natural that they would want to sell at some stage. And so for those folks, and not only folks who survived FTX and held through it, but also folks who held through the mining ban in China, and various other Bitcoin events that, would otherwise have shaken most people out and did shake most people out. The $100,000 area, all the way up through $126,000 was sort of their, it was their treat, right? It was their reward, if you will, for holding through all of those different periods. So in my mind, that's sort of what drove the selling. $100,000 was a level that most people thought Bitcoin would never reach, right? To be frank, $100,000 was kind of a meme for a very long time in the Bitcoin space. and then actually hitting it, you have to imagine that that led to a lot of selling, a lot of individuals who were saying, "Oh my gosh, we're finally at the promised land. I'm going to distribute my coins." And so, this drawdown, this 45%, 50% drawdown, isn't so much the death knell for Bitcoin as it is just the beginning of yet another bear market that Bitcoin has experienced numerous times in the past. But one of the same characteristics throughout each of those times is that everybody thinks Bitcoin, a lot of people think Bitcoin is dead. Like, this is the final bear market. This is it for BTC for whatever reason, right? Last cycle, it was government regulation, the SEC, China, whatever. This cycle, it's quantum computing and software stocks correlation, and AI is disrupting absolutely everything, and all of these different narratives. But ultimately, like, narratives follow price. The only reason you're seeing those narratives crop up is because price is underperforming. If Bitcoin was at $150,000 right now, we wouldn't be talking about quantum computing posing an existential threat to Bitcoin, because people in the background working on Bitcoin Core are already working on solutions for it. Similarly, we wouldn't be talking about AI potentially disrupting Bitcoin, because Bitcoin wouldn't be correlated to software stocks. It would be at 100. It would be at a much higher level. So ultimately, narratives follow price. I don't really ascribe to anything other than the fact that Bitcoin fell. It fell dramatically, but it's done that before numerous times, right? So it's nothing out of the ordinary. It's nothing to be afraid of necessarily. And it's anybody's guess as to why it happened. But the clearest reason why it happened is because we reached a price level at which long-term holders felt comfortable selling, right? Which is, sort of a cop-out answer. We can give a million and one guesses as to why we believe that is, but that's the broad reason.
Yeah, that definitely makes sense, and especially recently, we've seen really a lot of stories and discussions around the impact of quantum computing on Bitcoin. There are people that are getting really scared of the impact of quantum computing. In my personal opinion, I think 99.9% people do not even understand what it actually means. How the quantum computers obviously work and what could be the impact. So we'll definitely leave it to the clever people to crack this problem. The one, though, very interesting point, and I think you mentioned it in one of your recent podcasts, was the strong correlation between the Bitcoin price and the software stocks. Do you see this only as a coincidence, or is there any reason why Bitcoin should be so closely correlated with these stocks?
For sure. I mean, ultimately, Bitcoin has been correlated with equities, with high beta equities for quite some time. It's an informational asymmetry, right? So Bitcoin should not be correlated to risk on equities. It should be correlated to gold, right? It should be an asset that folks want to own in good times and in bad, but especially in bad times, right? During risk off periods. And so ultimately, it's just the latest example of Bitcoin being correlated to equities that it shouldn't be correlated to. In my mind, the reason it's happening is just because hedge funds, other institutional allocators are trading these things in the same bucket. Bitcoin is software, obviously. Like, you can spin up a Bitcoin software, you can run a node on your computer. However, it's not a software stock. It doesn't have corporate risk. It doesn't have governance risk. It's not prone to interest rate risk. There's no default risk. And so all of the factors, all of the considerations that are baked into an equity price shouldn't be baked into Bitcoin's price. And so even though Bitcoin is a software, it shouldn't be correlated to software stocks whatsoever, particularly during this downturn, right? The reason that software stocks are underperforming is because AI is disrupting them. You can spin up an application that's similar to the top 10 SaaS companies in the world using Claude Code, using Codex, using any one of these tools, using your Claude bot connected to any one of these LLMs. And so that's why the equities are falling. The software stocks are falling, and rightfully so. But Bitcoin cannot be disrupted by those same forces. And so what does that tell you? Bitcoin is selling off, but it shouldn't be, right? Ultimately, Bitcoin's monetary properties, and I've said this time and again, but Bitcoin's monetary properties allow it to be a completely uncorrelated risk-off asset that investors want to own in good times and bad, right? It has no counterparty risk. It has no central authority that governs its monetary policy. It is a bearer asset. It's non-custodial if you hold it properly. And so ultimately, Bitcoin can one day be, and will one day be, the least correlated asset in existence. And until then, the more that investment managers, other financiers trade Bitcoin as if it's a software stock, the bigger a discount you can get Bitcoin for during moments like these. So that's sort of why it's happening in my mind. Investors believe that it's something it's not, but over time, this correlation is going to wane, and we're going to see Bitcoin become a very uncorrelated asset.
Yeah, that definitely makes sense. And the what I would add, or maybe also an additional question to this, was a lot of people naturally are trying to find patterns in the market, and try to explain market moves. One of those patterns, or as we always say, history repeats itself, and this is really something that people have been, Bitcoiners in particular, have been applying to Bitcoin market in general, is the 4-year cycle. And I believe that you suggested that the 4-year Bitcoin cycle might be over and that we might be actually looking for some surprises or shocks in 2026. So what is your overall take on the 4-year cycle? Is it over? Was it just a coincidence? Has it ever even worked the way it was supposed to? And are we going to be able to stick to this 4-year cycle in the future? What do you think?
Right. So the 4-year cycle is interesting. So it's this idea that about 12 to 18 months after the halving, Bitcoin reaches its cycle top. And then we have about a bear market that lasts for about a year. And then it resumes again, right? We get another halving. 12 to 18 months later, Bitcoin reaches its cycle top, so on and so forth. Now, this wasn't necessarily, this was something that a lot of folks, myself included, believed that it would not occur this year, specifically because of the changed nature of the inflows into Bitcoin. Obviously, namely the ETFs, right? The buy side on the ETFs is just absolutely enormous. The same people that are bidding up, the equity market passively every 2 weeks or bidding up Bitcoin every 2 weeks. There's simply too much buy side and there's too much stability for Bitcoin to crater, right? Bitcoin native factors like the halving have a diminishing marginal impact on Bitcoin's actual price. But that wasn't the case, right? The general idea behind halving is that, because the block subsidy is being cut in half, every 4 years, that has an outsized impact on Bitcoin's price eventually, right? Less supply coming online, the same amount of dollars circulating. Eventually, you get a parabolic increase in the US dollar price. But now that only about 3.125 BTC are being issued per block, it's kind of hard to argue that there's a major impact on cutting the block subsidy, because 3.125 BTC at this stage is pretty marginal, right? It's not 6.5 BTC. It's certainly not 13 BTC. It's definitely not 26 BTC. And so prior halvings would have had a much more outsized impact on price action. And it's hard to argue that, with the block subsidy now being 3.125 BTC every 10 minutes, it's hard to argue that it has a major impact. The halving event itself has a major impact on price. And so for those two reasons, I didn't expect the 4-year cycle to play out, right? The
Mhm.
4-year cycle posited that we would get an all-time high or a cycle top right around October of 2025. And lo and behold, that's exactly what happened. So we topped right around October of 2025. So a couple of things may be driving that to occur. Like, number one, it could simply be that a lot of people were expecting the 4-year cycle to occur, and therefore they sold right around that October 6th event, right?
Mhm.
The second, that I believe, to be another factor that plays into this, and very important, is that existing software stock correlation. Beginning in October, we have seen this market sell-off in software equities, again, as a result of this boom in AI capabilities. And that's also basically the exact same time that Bitcoin peaked. Just a couple of days before the October 11th major liquidation event in Bitcoin, the largest one in history. So, in my mind, that's sort of where we stand. It's a combination. The 4-year cycle is still alive, simply as a result of those two things in my mind. Number one, um, sort of a self-fulfilling prophecy of selling, people preparing to sell around October 2025 because they anticipated the 4-year cycle to be putting in a top around that time. And then the second thing, just selling of software equities around that time because of AI disruptions and Bitcoin's correlation to it. So, the 4-year cycle, in a sense, will continue to persist so long as we see a bottom around August to October of next year, right? As long as we get this 10 to 12 month bear market following the cycle top, and we don't bottom out in the next month or 2 and ascend higher and, hit a brand new all-time high around that same time frame, like a year from the prior cycle high. That would invalidate the 4-year cycle. But, for the time being, like, all signs in my mind sort of point to a couple more months of just consolidating around these current levels, maybe going a little bit lower and then maybe going a little bit higher, faking everybody out, before ultimately, putting in the bottom, which I believe is, gonna potentially be around this price, potentially much lower if we get any sort of exogenous external catalyst. But, yeah, so the 4-year cycle could remain intact in the event that we do bottom later on in the year. If we bottom sooner in the year, then it's really hard to argue that the halving has any impact on Bitcoin's price.
Yeah, that makes complete sense. And then I guess really the ultimate question is, so what do you feel is going to be the catalyst that's going to help Bitcoin, be it this year or later down the line, as a the engine of the future bullish momentum for Bitcoin price. Yes, Bitcoiners, they always claim they do not care about the price, but everybody's watching the chart. So what do you think are going to be the drivers behind the future bull market?
For sure. I mean, it's hard to say, right? I think that sustained ETF inflows are going to be one of the things that massively pushes Bitcoin's price up. If you look back to when the gold ETFs were first launched, that led to massive price surges in Bitcoin in gold rather, because it made it simply easier to own the asset. It made it simpler for more people to purchase a claim on this asset. And so, sustained gold inflows are really a huge part of what has driven it to its current level. And so I believe that sustained ETF inflows are going to be one of the major catalysts for BTC moving forward, not just in this next cycle, but in the cycles that follow. And then I think the second thing is just a bottoming out in this software equity correction, and ascent higher, right? Ultimately, Bitcoin, one of the major reasons Bitcoin is underperforming right now is its correlation to higher beta equities. Once we get a shift back in the other direction, once we get a risk on move, then Bitcoin should catch a pretty considerable amount of that bid and begin moving higher as well. So I think it's those two things in tandem, right? Like the ETFs continuing to bid BTC, that's going to be a massive catalyst because those are just an absolutely gargantuan force that is really, really difficult to move and contend with. They're consistently buying, not at this point, but generally speaking, they're consistently purchasing, more than 100% of the Bitcoin that gets mined every single day. So that's going to be a huge factor. But the broader factor is that we get the shift back into a risk on environment. Software equities begin doing well. The bottom gets put in there, and then Bitcoin has clearer skies ahead to actually begin ascending higher. Until the environment shifts back into a validly risk on territory, Bitcoin's path of least resistance is probably just chopping right around this area, right? I will say we're probably going to get some points over the next couple of months where Bitcoin, maybe it reaches 70, maybe it reaches 75, maybe it reaches 80, and people begin saying, oh my gosh, the bottom is in, we're going much higher. And we won't be, right? And I think that, there'll also be points where we, potentially go to 55 or even 50. And people say, okay, Bitcoin's going to 20. And it doesn't. So I think, fake outs in either direction. If you'll remember the summer of 2024, when it was just nonstop choppiness all over the place, Checkmate called it chop solidation. I believe that that's the path forward here, right? Particularly because we're around a bunch of key levels right now at 60,000 or 67, wherever we are, right underneath us. The realized price, which is the average on-chain cost basis for folks, is about $58,000. That's also the 200-week moving average, is about $58,000. So it's a really key level. Bitcoin bottoms tend to be formed right around there. So that's the level that's a really key level to watch. And so chances are, right, 50%, 55% drawdown, right, 55K, 50K, maybe the bottom. But like, we are very close to the bottom as it stands. It's solely a function of how long we're going to spend here. And if history is any indication, we're probably going to spend quite some time here before moving higher and just bore everybody to death. Convince people that Bitcoin is dead, as is what usually happens before ascending higher.
hmm Well, I'm definitely sure a lot of people will appreciate our views on the fact that we might be at the bottom of the cycle, let's say. But now let's shift the gear and talk about the other very interesting topic that I wanted to open up with you, which is real estate and Bitcoin. Before we jump into also what you guys do with Horizon, there's this one theme that is been bothering people around the world, especially in the last decade, I would say, and that's the ever increasing prices of real estate, right? So, what do you think is why is it almost impossible nowadays, especially for young people, to acquire a home, acquire an apartment? What is the key driver of this fact?
That's a really great question. So the simple driver that is causing young people to be priced out of homes and apartments is wages just have not kept up with inflation over the last several decades. So if you normalize this all the way back to 1971, wages have consistently been about, 0.5% to 1% underneath price inflation every single year. And if you take that over the course of 50 years, right, 55 years since 1971, then suddenly, those who have owned assets have done extremely well. So those who already owned homes or who purchased homes in the 70s, the 80s, or even the 90s, um, though they did considerably better than young people who are just now entering the workforce. And so, like, we used to live in a world where wages kept up with price inflation, at least to some degree, right? Because the money was backed by gold. It was tethered to physical reality. And then when we departed the gold standard, when we left that, when we untethered money, which is a communication mechanism from physical reality, it became extremely difficult to accurately price things, and it became extremely difficult to accurately price labor. And so as a result of that, wages have dislocated from price inflation. That's been the case for the last 55 years. And before you know it, now there is a 30, 40, 50% dislocation in the growth rate between inflation and wages over the last 55 years. And so wages simply haven't kept up with asset prices. And so it's strictly a function of price inflation. That's the reason why. And it's not helped by the fact that homes, being relatively scarce, are one of the go-to sources, one of the go-to sponges for this printed money, if you will. Um, Homes have been a highly financialized asset. Obviously, the mortgage is the bedrock of the US economy. Consumer spending relies quite a bit on being able to have a mortgage. And so it's an extremely important mechanism. That said, since 1971 in particular, homes have become a store of value, right? The reason being it's difficult to build a new home. It's even more difficult today for other reasons, but it takes time, it takes labor, it takes materials, it takes investment, it takes a great deal of planning in order to build another home. And so as a result of that, naturally, it's a pretty good store of value. Parking your capital in it, preserving it over time. The problem is that rather than the primary function of homes being a place to live and the secondary function being a store of value, storing value has become the primary function of homes, right? People who have been the beneficiaries of this asset price inflation over the last several decades have chosen to purchase multiple properties. And homes being relatively scarce, they have absorbed a great deal of this monetary premium, a great deal of this newly printed money without any improvements to them, right? There are numerous homes around me that were built in the year 1990, 1995, 2000. None of them have had any improvements whatsoever, but each of them has consistently risen 3% or more per year for the last 20, 25, 30, 40 years. Um, and again, many of them haven't had any material improvements whatsoever. And so what that tells you is that the homes are not rising because they're getting better or they're adding more square footage, what have you. They're rising because money is being printed out of thin air and these homes are being marked up in value. And so the way that you fix this problem is by creating a store of value that is harder than homes, right? That is harder than real estate in order for people to invest into. And that asset is Bitcoin, right? Bitcoin has grown 14x relative to global real estate over the last 6 years. So since 2019, Bitcoin has grown from about 0.06% or 0.6% of global real estate to over 1% of global real estate. And it's not slowing down. And so what that's telling you is that capital is shifting out of real estate at the margin as a store of value and into Bitcoin. So that's a bit of a long-winded answer toward your initial question. Your initial question was, why are young people priced out? but that's the primary reason, right? It's the fact that, homes have been used as stores of value purely because of their attributes of being a relatively hard asset. Um, and wages simply have not kept up with inflation. Another
Mhm.
component of it is the student loan complex. We don't have to get into that, but I'm not a huge fan of government guaranteed student loans. It turns colleges into largely useless degree mills. Like a lot of folks coming out of college or going to college have no idea what they want to do. The number one major in the United States is increasingly undeclared. So people are literally going to school without having an idea of what they'd like to study. Of course, 20, 30, 40 years ago, that may have meant like you were deciding between studying medicine and engineering. But today, undecided simply means I'm going to go to college to delay having to work in the real world. And as a result, I'm going to leave with 100, 200, $250,000 in student loan debt. So that's another part of why young people are behind. But primarily, when we're talking about homes and apartments specifically, price inflation and homes turning into stores of value are a huge reason behind it.
Well, definitely agree. And as I mentioned, I think this theme really resonates across the globe, right? I mean, wherever you travel, you see people really struggling with being able to get their homes, pay for their rents very often. The solution that you're proposing is obviously Bitcoin, right? So, could you walk me through what's the idea actually behind? I mean, if I'm a young person or a homeowner, what options do I have, to kind of tackle this particular problem?
For sure. I mean, one of the biggest options that you have is to rent and purchase BTC rather than owning a home and purchasing BTC. And the math behind that is pretty staggering. So let's assume that you have a, $500,000 home, you put 10% down, you put 50 grand down, and you get into a 30-year mortgage, right? Let's assume that homes appreciate with the national average right now of about 2%. Over the first 10 years of your mortgage, you're going to be basically paying exclusively interest, right? Over the first 10 years because of the loan amortization. And so because of that, your $50,000 that you put to the property is only growing by about 2% a year. You're basically not building any additional equity on top of that with your monthly payment. And so assuming 50 grand grows at about 2% a year, after 10 years, you're going to be looking at maybe 60,000, maybe 65, 70,000. Not a lot of money over 10 years. If you compare that even to the S&P 500, let's say instead that you're able to rent for $500 cheaper than your monthly payment. You take that down payment you will have made initially, you put it into Bitcoin, you take the money that you save from not paying your mortgage, from the difference between your mortgage payment and your rent payment, you put that into Bitcoin as well, or even the S&P 500, which is doing 12% a year. Then before you know it, you pick your head up after 10 years, instead of your $50,000 down payment growing to $70,000, and now you're just starting to begin paying the principal on that mortgage. Your invested capital has gone from $50,000 to 200,000, 250,000, 300,000. And all of a sudden, rather than putting a massive down payment on a home and then paying your mortgage, you can afford to go out and purchase a home outright. Right. So for young people, what I would advise, and it's the thing that I'm doing currently, would be to rent and then put the additional income as a result of renting instead of owning into Bitcoin, into another asset, right? So that way, by the time you pick your head up, you have the money to go purchase a home whenever a life event necessitates it, right? When you get married and you want to settle down, when you have children and you want stability for them, you want them to be in the same school district with the same friends, that would be an instance in which, okay, it's time for me to sell a chunk of my BTC and go purchase a home. But until then, the path of least resistance for young people, if you'd like to get ahead, rent, live below your means, and put the rest into investments, right? It doesn't have to be Bitcoin. It doesn't have to be something that's insanely volatile. If you believe in Bitcoin's value proposition and its monetization trend, then of course it would be a safe bet for you to put that money in there if you could stomach the volatility. But even putting it into the S&P 500 or something else, right? It can put you much further ahead than if you try to build wealth using purchasing a home, particularly now with mortgage rates at anywhere from 6 to 6.5%. It's just not an ideal value proposition for young people.
Definitely. I think we're also touching on a I would say cultural or historical kind of fact that, historically people were always willing to own a house and they were trying to get into it as soon as they could. The reality in the markets nowadays is really different, right? As we've discussed, especially younger people do not have the chance to get a mortgage, at an early age, with rather lower incomes and all that. So it is pretty frustrating, but it's really great to hear that we do have a way around. My only concern would be like, how do we make sure that people actually do understand these concepts? It is kind of a financial education layer that everybody kind of should go through. What's your view actually? What would you suggest to younger generation, especially? How do I get out of this loop? And how do I make sure that my future is gonna be really safe from the perspective of having enough assets or wealth, that I can live through or live from rather in the future.
For sure. I mean, I would say first and foremost, like study Bitcoin. Like what you need to do is understand the system that is trying to steal your money. Through quantitative easing, through manipulating policy interest rates, and all of the negative downstream effects that come as a result of that. The second thing, once you learn about that, take an honest assessment of where you are in life, right? And then work on upskilling yourself, right? Improve your skills and abilities such that you can increase your monthly income, and take it to a level where you can purchase an amount of BTC that you're comfortable with, right? So like for young people, they need to focus on investing in themselves and then taking the fruits of their labor and investing it in an asset that cannot be printed. So that's what folks need to focus on, right? I think, more than anything, even before like, plowing one's net worth into Bitcoin, that oftentimes isn't the most intelligent way of going about things, particularly for very, very young people, right? So folks who are, 16, 17, 18, 19, 20, those who are just entering into the workforce, or still in college, it's not the best idea to take what little money you have and throw it into Bitcoin. And so early on, what young people should be doing while they still have their neuroplasticity, while they still don't have any obligations, right, as far as a wife or children are concerned, generally speaking, some young people may, and that's totally fine. Um, would be to invest in themselves. Learn very aggressively, learn as hard as you can, try to soak in as much knowledge as you can, and get really good at one or a handful of things. Become a specialist, become an expert in a handful of things, so that you can be paid more, right? You can ascribe a higher price on your human capital, right? That is the most important investment you need to make as a young person. And then learn about Bitcoin, through that process, understand why it's important to store the fruits of your labor in an asset that can't be printed. I think for a lot of young people, the mistake that they make is learning about Bitcoin, learning about monetary debasement, obsessing over it, staring at the Bitcoin price chart every single day. But they aren't wealthier, right? They haven't changed. They haven't moved in years. They haven't upskilled themselves. They haven't improved as individuals, physically, mentally, spiritually, relationally, whatever. In the workplace, and that's where they get stuck, right? They obsess over money printing. They hope and pray for the Fed to print $10 trillion tomorrow and Bitcoin to go to $1 million. But that's not the way the world works, right? You need to invest in yourself. You need to make it so that you can actually earn plenty of fruits for your labor, and then store the fruits of your labor in Bitcoin. So that's sort of what I would say there, because it's a pitfall that I've observed a couple of times over the years, and young people and anybody in general, you don't want to live a life staring at a screen, staring at the Bitcoin chart, because before you know it, you could lift your head up and all of a sudden Bitcoin's at 67 grand. It's the same price that it was 5 years ago. You go completely insane. You've wasted 5 years of your life. So do anything but that.
I fully agree, and I mean, I would say many of us went through these phases, right? As we say, we came for the money and left with like a fundamental shift in our minds in terms of how we think about the world, how we think about money, and all that. And this is something that I really appreciate personally about Bitcoin, that it kind of makes you much more humbler. It makes you kind of break your stereotypes, and it really kind of drives the engine of the willingness actually of learning and educating yourself and all that. So that's really something that Bitcoin is very unique For the one thing that I wanted to ask you about is actually what you guys do in Horizon, because I think you've touched on it slightly when discussing the real estate and connection with Bitcoin. Like if you're a homeowner, you can use part of your asset and get exposure towards Bitcoin. So could you walk me through how the whole system work, and what are the basically services that you guys propose or promote actually in the market?
For sure. Yeah. So it's kind of the inverse of what you guys are doing at Firefish. With Firefish,
Exactly.
you're using Bitcoin to acquire US dollars. And I love the platform, by the way. I love the peer-to-peer aspect of it. With Horizon, you're using it's sort of a flip on that situation. You're using
Exactly.
real world assets, your home, in order to acquire more Bitcoin. And so it's quite neat. I'll sort of walk through the history of the company, and then I'll walk through kind of how the
Mhm.
process works. Prior to this, we had built a company called Thea, still up and running, still operational, and it was a multi-sig platform, self-custodial. A lot of folks were coming to us and asking about Bitcoin-backed loans, and for us, having developed this multi-sig platform, collaborative custody, it would have been a bit of a stretch to directly create Bitcoin-backed lending in the platform itself, right? The path of least resistance for us would be to partner with somebody like Firefish or another entity that offered peer-to-peer Bitcoin-backed loans rather than building them in our app. But it got us thinking. It got us thinking about other ways in which we can create some sort of liquidity marketplace within the Bitcoin ecosystem. We did not want to compete in the Bitcoin-backed loan space. There are five major names, and now even Coinbase offers these things, and so it's not a space we wanted to get into. Um, but we looked at the other side of the equation. We looked at real world assets, being able to leverage those, access to liquidity from those in order to invest in Bitcoin. And what we found is a pretty startling statistic that over 60% of the typical American's net worth is locked up in their house, right? It's in their primary residence. And right now, today, $35.7 trillion worth of US home equity is floating around within the country. That's up from $20 trillion in 2020. So in just 6 years, less than 6 years actually, this data is from 2025, we've almost doubled the amount of US home equity in the United States, but we haven't doubled the amount of homes in the United States, right? When the Fed printed a bunch of money in 2020, and then in 2021, and in the beginning of 2022, homes were one of the biggest beneficiaries of that. They inflated to a massive degree. US homeowners' equity rose to the highest level in history. And so now more than ever, the home is someone's largest asset, right? It's typically the American homeowner's largest asset, but it's their worst performing one, right? If you go back over the last decade and you take the average percentage appreciation of any given home across the United States, it's about 3% per year. The money supply is growing at 5% a year. So homes are actually losing 2% of value in real terms every year. And so, if you were take the label house off of your house, if you had an asset in your portfolio that was 55% of it, and it was only growing by 2% every single year, what would you do? Right? You would sell it and you would purchase another asset. The only difference is that because this is your home, it's not a financial investment first, it's a place to live. And so you can't sell your home and live in your Bitcoin, right? Or purchase another asset, do these things. And so it's interesting because it's the largest asset in people's portfolio, but because they live there, it's not something they could just sell and purchase an asset that's performing better. And so that's what we sought to correct with Horizon, and that's why we built Horizon. So Horizon helps homeowners across the United States convert their home equity into Bitcoin without monthly payments, without term limits, without debt, and without interest. So essentially, what the homeowner is doing is they're selling us a share in their property. In exchange, they get tax-free Bitcoin. They could fully self-custody it. We are not owed any of the Bitcoin upside, and that's the entire process. So we're live in 18 US states currently, plus Washington, D.C., and the process takes about 3 to 4 weeks. And basically, it revolves around this central idea, which is that Bitcoin is an asset that is monetizing from, sub $2 trillion to potentially one day $100 trillion asset, in my mind. Um, and homes are the largest asset that any given person has in the United States, but oftentimes they are the worst performing asset. And so what we want to do is allow homeowners to swap out of an asset that isn't working for them and put their equity to work in an asset that has historically outperformed housing. Um, And that's the entire name of the game, right? And that's basically a little bit of backstory about Horizon and sort of the way that it works.
So that sounds to me like you're basically short the real estate and long Bitcoin, right? Just like with us at Firefish, we're saying that you're short fiat and long Bitcoin because you're sticking to the asset that actually appreciates better over time than the other. But this is a very interesting point. So I mean, naturally, with these kind of innovations, people would ask, what are the downsides? What are the risks? Can I actually lose the home if the price of Bitcoin goes down? Or so if I'm using your services, what would be the downside or the potential risks I should be aware of?
That's a really good question. One of the things we wanted to make sure of when we were creating this process is that people's homes were not put at risk. Bitcoin is an extremely volatile asset, and we've all heard the horror stories of someone taking a really high LTV Bitcoin backed loan, and then all of a sudden, a day like February 11th comes around, and the volatility comes. They get a liquidation notice, and they can't post any more collateral. They get liquidated out of their Bitcoin. The last thing we would want to have happen is for that to occur for your house, right? Is for Bitcoin's volatility to put your home at risk. And so in the agreement itself, in the Horizon deal, your Bitcoin is not at risk. Your home is not at risk due to Bitcoin or home price volatility. So if your home is hugely volatile, if your home loses 10% of value, 50% of value in a year, we cannot come knock on your door and demand repayment. In the exact same way, if the Bitcoin goes to zero or if it is just massively volatile, we cannot knock on your door and close out the agreement. So there are no risks to the home or the Bitcoin itself from Horizon itself. However, in the event that the home falls into foreclosure for any other reason, like if the homeowner were to stop paying their mortgage or stop paying their property taxes and the home fell into foreclosure, it went up for auction, then in that event, Horizon would be entitled to payment. But beyond that, there's no term limit, there's no monthly payments. And so as long as the homeowner is in the home, they can remain with Horizon, right? Um, a couple of other like really edge case scenarios, just so we can paint a really full picture about the risks associated. A lot of folks ask us, well, what if Horizon goes out of business? If Horizon goes out of business, our financing partner takes on your contract, your terms remain the same. What if our financing partner goes out of business? Same exact deal. Whatever bank or financial institution purchased the homeowner's contract, the terms would remain the same. In the same way that your mortgage may bounce between 4 or 5 different banks over the lifespan, same thing could occur with us, right? We're not selling these agreements to third parties. We're keeping them entirely in house. But in the event that we go out of business, and so does our financing partner, the terms would remain valid. The other question we get is, what if Bitcoin underperforms or Bitcoin goes to zero? So that is the key risk associated with Horizon, right? Your home is not at risk because of Horizon. You're not going to lose your home. Your Bitcoin is not at risk because of Horizon. There's no chance that you'll get liquidated from your BTC. However, the key risk associated with Horizon is that Bitcoin underperforms. So let's say you're a homeowner, you're living in $1 million home, you decide to swap $250,000 of your equity for Bitcoin through Horizon, you don't have a mortgage on the property. Let's say for 10 years, that Bitcoin only grows by 5% per year. In that case, chances are you would be underwater with Horizon, right? That would imply a future Bitcoin price of only about $120,000. So long as you believe that Bitcoin is going to outperform the growth in your home, then Horizon is a favorable deal for you, right? If you don't believe in Bitcoin's long-term growth potential, if you don't believe that it's a high growth asset, then the agreement doesn't make sense. However, if you do believe that, then it's a pretty favorable deal. So the chief risk with Horizon, to answer your question, is that Bitcoin underperforms dramatically or it goes to zero. But outside of those two scenarios and outside of home foreclosure as a result of those other factors that don't have anything to do with Horizon, the homeowner is in a really great spot using the agreement, and that's what we wanted to make sure of when we were creating this process. We didn't want to make something that kept homeowners up at night. And we believe we've truly created like a set it and forget it solution. You enter the Horizon agreement, you buy the Bitcoin, you never think about it until you sell your home.
Excellent. That sounds really reasonable, and wishing you good luck because I think a combination of the real world assets with Bitcoin is really something that we're gonna be coming across much more often in the future. On that note, imagine basically Bitcoin absorbing the monetary premium from real estate, right? So how do you think
Mhm.
the world would look like if this whole monetary premium that has been growing over time due to the money printer and rising inflation, what would be the impact on real estate? What would be the impact on Bitcoin?
Yeah, so a couple of things. Like first and foremost, the impact on real estate would be massive. Homes would be affordable again, right? They would be trading at maybe a 5, maybe a 10% premium to their replacement cost. So whatever the cost of the materials and the land and the labor are to build the home is trading at only about 5 to 10% of a premium to that. Whereas today, homes are trading at about a 40% premium to their replacement cost. So, if someone's living in a home that's worth $1 million, its actual replacement value is anywhere from 550 to $600,000, and the rest of it is just pure speculative monetary premium. In a world where Bitcoin siphons away that monetary premium and grows as a result of it, then the more that Bitcoin does that, the more that other assets do that, and the less that homes are treated as stores of value, then the more affordable homes are. Right, so it's pretty self-explanatory. So in a world where Bitcoin siphons away a lot of, if not all of the monetary premium from real estate, then you have affordable homes for number one. For number two, you have Bitcoin that grows into a multi-trillion dollar asset. So currently it's $1.3 trillion in size. If Bitcoin were to siphon away 10% of the premium trapped in US real estate, for example, then Bitcoin would be a $10 trillion asset, right? Roughly speaking. And so, at that stage, you'd be looking at about 750 to $800,000 per BTC, which would be incredible. And so, and then of course, as it siphons away 10%, you're looking at $1.5 million BTC, so on and so forth, until it siphons away, all of the monetary premium in global real estate, which I believe it is destined to do over a long enough time horizon. And so that's sort of what the world looks like, right? People can own homes more readily. People don't view homes as a store of value. And as such, they could focus on what really matters when it comes to a home, right? Figuring out the location, investing in their community, spending more time with their family, having more children. That's what the world looks like when homes are more affordable. And people can actually afford them as a function of new stores of value coming to light that siphon away that monetary premium away from real estate. So, in my mind, that's the way that the world looks, not just if, but when that happens, because in my mind, that's an inevitability. It's just a question of when.
Well, that's excellent, and it sounds really like a almost like a fantasy land, right? And I love the fact that actually Bitcoin is the way, Bitcoin is the tool that actually can fix this. That it sounds counterintuitive, but Bitcoin can actually fix the real estate problem that is, as I mentioned, sort of impacting people all around the world and bothering everybody, including myself. But on that note as well, if if this is the case, how do we make it happen? Actually, like if we want to get into this phase, how do we make happen that people do understand that this is the right path? Owning Bitcoin is the right way, and the future can be really fixed. And all these problems related to real estate and renting and everything around it can be fixed through Bitcoin. So, what is your take on? We know what the future should look like, but how do we get there?
For sure. More education, for one. More of a broader understanding of Bitcoin's monetary properties and why it serves as a superior store of value to real estate. That would be number one. Number two, people actually doing this in practice. So people selling their rental properties and other investment properties and purchasing Bitcoin instead, in being very vocal about why they've done it. And number two, folks using services like Horizon, right? I don't mean to plug our own product too much, but the reality is like we are helping this transition occur from homes being a store of value to converting that equity into BTC, without the homeowner actually having to sell their property. Those two things in tandem, or those three things in tandem, rather, right? I think what you're seeing right now is a massive trend of folks selling their investment properties to purchase BTC. Because when you think about it, a secondary home, a vacation home, an investment property, it's basically having to run another business, right? You're not going to be there year round. Chances are you'll need a property manager, depending on how large the home is. But particularly if you're renting it out for short-term or long-term rentals, you'll definitely need a property manager, depending on how far away it is. You still have to pay property taxes on it. You still have to cover the mortgage payment on it if it's not fully paid off. And so before you know it, you have to have a guy to do the lawn. You have to have a guy to, be the handyman. Before you know it, basically that secondary residence or that investment property becomes another business. And for a lot of people, dealing with tenants, having to manage all of those different employees, that weighs on them quite heavily. And all of it just to underperform, the preferred equities that are available in the United States, right? You may be getting 3, 4, maybe 5% on your investment property annually. With Stretch, with SETA, right? You're getting 11.5, 12, 12.5%, all of these backed by Bitcoin, or just purchasing Bitcoin itself, right? Cash flow is nice, but at what point, is it less valuable than an asset when the asset is doing 20% yearly, 25% yearly, 30% yearly? Bitcoin is doing those things. And so at some level, you have to understand there's a huge trade-off between the work you're putting in to the output that you're getting. And at what stage during that life cycle, Bitcoin becomes more favorable than owning real estate. And a lot of folks are coming around to this reality. So I know a few folks personally, also Grant Cardone, major U.S. real estate investor. He's been selling a lot of his properties for Bitcoin specifically. He currently has a property in Miami Beach listed for like 700 Bitcoin. Mark Moss as well used to have a ton of rental properties, a ton of investment properties, sold most of them in order to buy Bitcoin. So, large famous investors are doing this. Popular individuals are doing this. Everyday folk are doing this as well. You browse Reddit for 5 minutes, you could see a bunch of different stories about people selling their rentals in order to purchase Bitcoin. So it's something that's happening more rapidly than you'd think. It's really unfortunate. Like my generation, one of the most popular jobs that folks wanted to go out and get after college was landlord. They wanted to be a landlord. And thankfully now that's becoming a thing of the past, slowly but surely. People are recognizing that rather than storing the fruits of their labor in investment properties, they can store the fruits of their labor in Bitcoin. So yeah, in order to get to that world, like obviously education is extremely important, more of a wider understanding of what Bitcoin is and what it allows for. Folks using services like Horizon, which at the margin help folks to take capital out of the real estate market, put it into BTC where it can do more work for them. And the third being people just actually doing this, which is selling their rental property, selling their investment properties, buying Bitcoin instead. And the good news is that those three things are already underway. And then another thing I'll add here, sorry, I know you have a lot of questions, but is actually combining the worlds of real estate and Bitcoin. So sprinkling a little bit of Bitcoin on top of the real estate deals that you're doing. Leon Wankum has talked about this numerous times. He's actually in the process of, well, actually, I can't say. Anyway, he's creating something that will make that a lot easier for people. You also have Grant Cardone, again, who has talked about in all of the real estate deals he's done over the last couple of years, he's added a little bit of Bitcoin to it. So that's another way that you can eventually, slowly but surely, make it so that real estate is no longer an investment vehicle. It's no longer a store of value, but Bitcoin is, right? By adding Bitcoin to these real estate deals, you realize slowly as a real estate company that like, oh my goodness, it's much better if I simply purchase this asset, hold it, borrow against it, and then eventually purchase more of it down the line. It's a better business to be in than Bitcoin. So, that's another way that you do it as well.
So then one additional question on this, like comparing real estate to Bitcoin, and that's through the lens of credit, right? So we understand that mortgages actually and all the credit rails built around mortgages have helped people to unlock massive credit engine, I would call it, right? Or basically assets that you can actually put into play. We've done a little research ourselves in Firefish, and the number we came up to is that roughly 40% of the real estate globally is collateralized through mortgage. If you look at Bitcoin at the same time, an asset that is digital, that is easily to transfer and so forth, the rates are only around 2, 3 to 4%, right? So why do you think this is the case?
Right. So 2 to 4% of real estate globally is collateralized by Bitcoin, you said?
No, 40% of real estate is collateralized through mortgages,
Yeah.
and 2 to 4% of Bitcoin itself is used as the collateral.
Gotcha. Okay. Yeah. So a fraction of a fraction. Um, that tells me how early we are, right? Ultimately, Bitcoin serves as pristine collateral, and you know what I mean by this. But what I mean by this for what I mean by this for the viewers is that when we're talking about collateral quality, some of the things that the counterparty wants to see that the lender wants, number one, liquidity, right? They want ease of use and ability to liquidate and reclaim collateral if needed 24/7. Now, with real estate, sure, it's a very, very large market, but the time it takes to actually sell one of these properties in the event that you need liquidity is extremely long, right? With Bitcoin, it's 24/7, 365 liquid, and you'd be able to liquidate your holdings and liquidate collateral into US dollars almost immediately if need be. So, for that reason, it is extremely high quality collateral. The other reason it's extremely high quality collateral is because it's instantly verifiable, right? You can verify that the Bitcoin you're holding is legitimate in real time. You can verify balances in real time, and that's hugely important. The third thing that makes it extremely valuable as collateral is it is a bearer asset. It's a bearer asset. You could hold it. You could put it into escrow extremely easily, and you could create certain rules where it could be taken out of escrow. And so that, amongst many other reasons, is why Bitcoin is considered pristine collateral or very high quality collateral and superior to real estate on all of those fronts. And so the fact that Bitcoin only makes up 4% of the 40% of real estate transactions globally that are collateralized by a mortgage, it just tells me how early we are in this journey of Bitcoin being used as collateral. As more lenders come around to this reality, Bitcoin is going to grow exponentially in size, right? We think that, the equity markets are large. Thinking about the global debt markets in relation to equity, in relation to cash as well, it's just an order of magnitude larger. And so the real unlock for BTC is when lenders recognize its utility as pristine collateral and begin using it as such. That would send Bitcoin to $100 trillion plus in very, very short order, in my mind. So you're starting to see the early rumblings of this. JP Morgan is beginning to accept Bitcoin as collateral for its clients. Obviously, Bitcoin backed lending companies, such as Firefish, are doing the exact same. And so, this is the very early days of what will ultimately be a huge use case for Bitcoin, and what will drive its total addressable market and its market capitalization all the way to 50 trillion, 75 trillion, $100 trillion and beyond.
I fully agree with you. Otherwise, I wouldn't be in this business in the first place. The one though criticism that we keep on hearing from people in the market, from Bitcoiners who might be considering or would be considering collateralizing their Bitcoin, is the interest rates, right? So historically, if you look
Yeah.
at the difference between the interest rates, let's say, I don't know, if you're taking a loan against either your home, you're taking a loan against your stocks or whatever else. The rates are very closely following the Fed rate, let's say in the US, whereas the Bitcoin rates have been historically, double digit. Borrowing dollars against my Bitcoin, considering all the great attributes that Bitcoin has, and paying 15 to 20%, that sounds kind of ridiculous, right? So what do you think is the reason? I would assume that it might be the lack of traditional finance liquidity providers not being present in this market. But what do you think we could do, or what do you think would need to change in order for the rates in the Bitcoin back credit markets going significantly lower?
Yeah, so I think there needs to be a reassessment of Bitcoin's risk profile in order for the rates on Bitcoin-backed loans to move lower, right? If we think about every single interest rate in the market as created and written in relation to the benchmark rate, which is the 10-year U.S. Treasury yield, the risk-free rate. If we think about rates that way, then you start to think about why Bitcoin-backed loan rates are so high, right? Currently, in the United States, you could find a custodial Bitcoin-backed loans for 10%, 10.5%, maybe 11%. You can go and get a home equity line of credit to purchase Bitcoin for a much lower rate than that, for like 7.5%, 8%. And so really, it doesn't make a lot of sense for folks to get a Bitcoin backed loan unless Bitcoin is one of their largest assets, which in the case of Bitcoiners, it usually always is. And so that's what it makes the most sense for. But when Bitcoin backed lending will really take off, it'll be when its rates are competitive enough to be comparable, if not lower, than other forms of asset backed financing. So when Bitcoin backed loans are lower than home equity line of credit rates, when Bitcoin backed loans are much lower than personal loan rates, that's when you see this thing really take off. And so it's a couple of things in my mind why rates are so high right now. Like number one, it's the amount of liquidity in this market. Okay. There simply are not enough large providers, well-known providers who are liquid enough to offer these very, very low rates. Um, the second thing is again, like Bitcoin's risk profile is completely misunderstood by ratings agencies. And as a result, it simply isn't, at major providers like JP Morgan, like Morgan Stanley, et cetera. Um, you know, Bitcoin backed lending simply doesn't have the backing behind it like it should. Ultimately, if you get major liquidity providers in the market, such as JP Morgan, which they're on their way to doing, and you can fundamentally reassess Bitcoin's risk profile, not around its price, but around its monetary attributes. I just explained why Bitcoin is pristine collateral. If lenders could understand that and begin using it more widely and accepting it more widely, then overnight you would begin to see a massive reduction in these rates. And so, I think it's the amount of liquidity in the Bitcoin backed lending market itself. I think it's the maturity and institutional coverage of the players in the space. And then also, I think it's because of Bitcoin's nascency, too. I think Bitcoin only being, 17 years old and some change, only being $1.29 trillion in size. I think that's another component of why the rates are so high. But ultimately, the good news is that these are all things that stand to change over time. As Bitcoin grows into a larger asset, chances are the volatility will go down. The rates on loans that you can get against Bitcoin will go down. With JP Morgan now entering the market, chances are you're going to see a follow-on from a bunch of other financial institutions entering the market as well. And that will naturally bring rates down because liquidity will be increased. The institutional coverage of these entities will increase. So that's why I think rates are so high right now. But thankfully, it's something that will change over time.
And this actually brings me to our final question, which is, how do you see the ecosystem evolving, right? I mean, if you look at where Bitcoin was 2-3 years ago, where it is now, it's a completely different world. So considering that the banks are getting in, are they the ones who are going to win the race, or is there going to be enough space for Bitcoin native platforms and operators like yourselves or Firefish and the likes?
For sure. I mean, I think the banks are going to be a massive help toward Bitcoin adoption in the exact same way that the ETFs were a massive help toward Bitcoin adoption. Once banks allow for the custody of Bitcoin, the purchasing of Bitcoin, and Bitcoin-backed loans, it that's really a game changer, right? I think Chase is exploring the ability for people to purchase Bitcoin and then hold it at the bank alongside their checking and savings accounts. That would be massive for adoption, right? And so it's really hard to argue that would crowd out Bitcoin native companies. It will. That said, I think there will always be a place for Bitcoin native companies, right? The gold ETFs and the ability to purchase gold and hold it on your own didn't kill gold companies. It didn't kill bullion dealers. And so, it didn't kill companies like I Trust Capital, or, different gold IRA firms, or different gold asset managers. And so, in my mind, these things are all positive. And if anything, they bring more eyeballs to BTC. What I said in the rise of the ETFs, or in advance of the ETFs coming, was I said that, the ETFs are going to be massive for spot Bitcoin, because ultimately people are going to come to the ETFs because not of Bitcoin's monetary attributes, but because of its performance. So they're going to come for number go up. They're going to come for its performance. And then as its performance happens for them, they're going to look into its monetary attributes and they're going to decide to purchase spot BTC. So I think the exact same dynamic is at play here. as the banks come online, as they begin offering Bitcoin purchasing, Bitcoin custody, Bitcoin backed loans, I think that's going to be huge for Bitcoin adoption because people are going to look into this. They're going to like what they see. And eventually, a great deal of those people are going to move toward purchasing spot Bitcoin, move toward purchasing Bitcoin on Bitcoin native platforms, using platforms like Firefish. They come for the number go up, if you will, and then they stay for the monetary attributes, the freedom technology. At least a decent percentage of them do. So it's good for Bitcoin in the long run. Yeah, I can't wait to see what happens next.
Excellent, excellent. Joe, thank you very much. I think there's really a lot to think about and a lot to look for and look forward to. Not considering the bear market we're in, but it does seems like the future is bright, and Bitcoin is the answer to a lot of problems around the world. So, first and foremost, thank you very much for joining us on our channel. It's been a great discussion with you. Definitely, I could stay here for 34 more hours and ask you tons of other questions. I hope to see you on our channel in the future. For the time being, thanks again, and best of luck with Horizon.
Thank you, Igor. I appreciate it.
Thank you.